Good afternoon, everybody. This is Dennis with the Active Trend Traders. Welcome to How to Make Money Trading Stocks and ETFs for Friday, It's the 11th of August. And so a lot of excitement going on in the market this week. Hopefully, very pleased with regards to the system. Anytime you trade a particular system, a mechanical system, it should keep you out of trouble when the market goes into a free fall or goes into a big drop. And so, yeah, you are going to, we will take a loss when that happens. But the fact of the matter is that it's to protect against the losses getting bigger and out of control. And ever since we came up with the active trend trading system, it has done exactly that. It basically, tries to move us into the market to take advantage of both stocks and ETFs, and it also provides the protection, the insurance policy to protect our capital going on. And so yeah, David, I got stopped out of the every one of the stock trades we did this week, and also got stopped out of a couple of Tesla trades and then reopened a couple of more in my own personal account. So I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Just a little bit about who I am. The motto of active trend trading is to clarify, simplify, and multiply. I work with Mike Traeger, who is the kind of my research partner, and he and I are always constantly looking at how can we make things simpler? How can we make things where people who are still working for a living can learn enough so they can take advantage and be able to trade the market. So that's what we are after. I want to remind you that expectations must be confirmed by price action to prove valid. Oftentimes we get hung up with our expectations and don't validate them against price action, and then we're just going off of a hunch, a hope, or whatever, which tends to not end up well when we're trading. The objective of this webinar is to provide timely, actionable intel review at the end of the week, and then a real quick market review, stocks and ETFs, setting up and going into and outcomes from everything that we were looking at earlier in the week. So let's get going. So as we can see, the market basically dropped a little bit going to the midweek. Part of that's due to the issue with North Korea and all the saber rattling that's going on there. Would not be surprised. We'll see how the market goes into this weekend. If we basically hold at this level without selling off into the close, could be a positive for things going forward into next week. Keep in mind, next week is monthly option expiration week. Monthly option expiration weeks tend to have a upside bias, so keep that in mind. So everything is positive for the year. And Russell dropped back down below its low, its high from last year. And so let's get in and look at some charts. There we go. Okay, let's take a real quick look at SPX first. The first thing I wanted to do with SPX is I wanted to basically this last bounce off the 50-day moving average up to its high that it made on Tuesday of this week, then puts in a shooting star kind of pattern, and then falls out of the sky the next couple of days. It looked like it was going to bounce off of old support, then gap down and ran down yesterday significantly. We are still below the 50-day moving average, but look where it runs to. I found this very interesting. It ran right directly to the 618 Fibonacci retracement from this low to this high, and now today what's it doing? It's bouncing around between the 50% retracement and the 618 retracement. Are we going to get a complete reversal and pop back up at this time? We'll see. If we, we will, last time it bounced down this far, we got all the way down to the 50. The 50 was the support level, and it bounced off from there. Eric asks, is SB showing a bullish harami today? That is correct. We had a short downtrend. We're getting a small body inside a big body, so you would consider that a bullish harami. That is happening right at support. It, can be considered can be considered a positive. I'll be keeping my eye on what's going on with the TSI. When's the TSI going to tick back up? And this pullback is what would be considered a normal pullback. If we drop the 618, then we're probably going to drop down here, to the 72% retracement and potentially a retracement all the way back down to the bottom. But keep in mind, we've got the 100-day moving average there that should act as a support level. So we'll see. The weekly chart, if we close where we are, we have a weekly chart that, I'm going to get rid of that real quick. As you can see, has engulfed 1, 2, 3 weeks worth of effort, partial of a fourth. And so this is a nice bearish engulfing pattern. TSI pointed down, momentum on the market forecast pointed down. The longer term momentum on the market forecast has not really dropped. Keep an eye on momentum. If momentum accelerates to the downside, we can expect that we're going to continue to pull on back down. And the question is, to where? Well, we've got a breakout area about 2400, which somewhere between 2420 and the 2400 level would be an area where we can expect a potential drop to and a turnaround at that point. Those are my money levels for watching what's going on. Here's what we've got going with the NASDAQ. NASDAQ, again, also pulls back down into a zone of support at the 50-day moving average and doing as a reversal. This is not a bullish reversal candle yet. If we close above the halfway mark on this large red body here, that would be a piercing line type of candle that is similar to a bullish engulfing, but it is considered a reversal signal. We're just about to get the 820 negative crossover or bearish crossover. And we also TSI, take a look at this. It's in an area, it could push a little bit lower, where it tends to reverse and pop back up. While we're talking about that, with the market starting to show a little bit more selling pressure, sell off to the bottom, we want to be very careful taking this first bounce, because oftentimes that first bounce is nothing, especially if we're breaking through the 50-day moving average on volume, really pushing down high, negative looking market forecast, momentum, and TSI. Oftentimes the first bounce is going to lead to basically a failure, especially once we get this topping pattern in place. So watch for a move back up to the 820 and then a reversal down below that. What we want to look for is basically these double bouncers. Okay, this makes especially if you get a little bit of a positive divergence, as we see in this particular instance here. We have a positive divergence between here and here as the price action makes a new low. So that is this signal here going with this price action here has a higher probability of success than this first touch off the 50 where TSI reverses, because this is we just made a pushed down, dropped down to a low, hit off support and bounced back up. Oftentimes this is one of those, and as we see it here, comes back to a lower high and then drops. So in reality, this TSI tick up, while it was good for a what would have been a short-term trade, it wasn't as powerful and didn't lead to the same follow through that this one over here did. So just keep that in mind as price action is pulling back down for the first time. We're still in a situation where we're pushing about probably 190 to 300 days of time where the I was going to say, we haven't had a 10% correction in that amount of time. So one can say that the market is overdue. However, we won't over anticipate what's going on there. But I wanted to share that concept with you with regarding the pullbacks in that, because this has been a market to trade the pullbacks, and when that personality in the market changes, we want to be watching for a more significant drop down to the downside. And here's Russell. Russell is bouncing off the 200-day moving average. That's a positive thing. TSI very very much extended. There we go. Very much extended TSI lower reversal area. It typically reverses around the -50 level. Doesn't get much past that, as you can see. It got back that far back in November of last year. But of course, again, we have a situation where Russell tends to be weak in August. September again starts getting, taking a bid in October timeframe. But we could bounce from this lower channel back up into the middle. So, would it be a tradable trade? Sure. The uptrend is still intact on a longer term basis. But the weakness, the Russell has been showing additional weakness. I want to point out one other thing to everybody as we are watching this, and that is this little pattern right here, this little flag pattern. And I'll get in here and draw this with a. So we have a price pattern where prices drop from here to here. That's part of the flagpole. Then they do a little bit of an uptick here. And then I want to duplicate that. And it puts in a flag. I will duplicate that thing, slide it back down to where it bounced, where it broke out of the bottom of the flag. And this gives us a downside target on the Russell down in the 1360 level, around that area. Again, with the TSI making a new low on Russell, I would be looking for, we may get a bounce back up. We have the 3-line cluster on the market forecast, but the first bounce back up may be a fake out. Rather than the real deal. So we would want to be looking for that multiple pullback, that pullback to a support level and then a rebound from there. Typically the second pullback or even the third pullback is a more reliable signal than just the initial, I just made a new low and I'm bouncing. If anything, this is now in a fairly accelerated downtrend. If short term on a week daily basis, where we came in, where it dropped hard below the 50, came back up above the 50, this little reactive move back above the 50, and then earlier this week, shooting star drops out of the sky fairly high volume. One of the things, Russell does not have the FANG stocks holding it up. And so it's given us probably a better picture of what's really going on internally with many of the stocks that are out there being traded. So, wow. So I hope that little analysis there was a quick and dirty to say, okay, that's how I can tell where this is going, where's a potential downside target on it. And does it have to go down here to the 1360 level? No, it does not. It can do a reversal right here and pop back up and just continue going up. But that's where we're watching it right now. A couple of other things I wanted to highlight. This, you talked about the bounce period. Talking about the bounce patterns for pullbacks right now. Also, keep in mind several things are going through a seasonal change. One of those is the biotechs. The biotechs, August and October, especially August, tends to be the weakest month for biotechs. So if you're trading the IBB or one of the leveraged in, ETFs for the biotechs, just be quick to take profits and be quick to cut your losses short. And so we'll be talking about that a little bit more on Final Hour. So let's go. There we go. So here is a percentage of stocks above the 20-day moving average. As of today, for the first time all year long, actually since November of last year, yesterday we get a close on this indicator down below the 30 level, and so it's getting into the area where Mike and I start paying attention to this. Have no signal to the upside as of yet, but if you are an early warning alert person, you did get a little pre-notice this morning saying that, yeah, we're watching this really closely for a secondary signal moving forward. What does this tell us? Is basically that, of the large bucket of stocks that's made up of the NYSE, I think it's in excess of about 3,000 stocks. Only 25% of those stocks are above their 20-day moving average, which means that, basically more of them are in a downtrend. We look at the NASDAQ, we look at the S&P, we look at the Dow. The Dow has not been falling out of the sky like you would anticipate. And so therefore, the larger body of stocks may be having some negative stuff going on with them, but those other weighted indexes are being held up by a select, like 5 or 6 different stocks, and you can all probably name them. So ETFs that we're looking for right now with the geopolitical things that are going on in the world. Institutions are on basically hair-triggered to the profit-taking mode. And the big question I have, is IWM and TNA going to bounce, or is one of the other indexes going to bounce better than that nugget? Are we going to see more upsides? And then we've got Momo and we've got Bob-off going on for earnings. And so, yeah, usually pre-notice that Dave on the early warning alerts comes out as via an email. It came out as an email this morning. You should have gotten that if you're I think you're an EWA guy. So I'm going to come back and look at those charts really quickly. Remember the reality of trend trading, identify the trend, define the areas of value of our interest of where you want to take action, and define the triggers, the strategies you're going to be utilizing with going into that. It's been kind of a fluffy kind of way. Got whacked on a couple of strategy 2 trades, and that's fine. Dropped off a couple of also strategy 1 trades. Fortunately, the strategy 3 trades have been continuing to move forward nicely. Just want to remind everybody where we're at. We're in August now. Typically, S&P drives sideways in August. And or since it is a post-election year, we also can anticipate a little bit of downside into the September timeframe. Tends to bottom out towards the end of September, so we've got about 6 more weeks for that to take place. Looking at gold for a rebound on gold. Again, looking for the biotechs for actually a drop through the rest of the month. So I would be looking at, if I was going to be looking at IBB, I'd be looking at the inverse leverage ETFs of IBB. So that's what we've got for today. I'm going to take a real quick look at those charts that we had spoken about. Hold on just a second. I want to go here. There we go. And this is a three-pronged chart approach: daily, weekly, monthly charts. Over here, recognize, we've got 3 more weeks for the month to be over with, but it's a good idea. Sometimes that chart can give you some indication of where things are going. Okay, Momo. Momo has earnings coming up on the 22nd. The 22nd is Tuesday of week after next. That's before market. I'll be watching Momo. We got stopped out on Momo. We had a really nice move up here, but it taken out with market weakness on its own. This is a nice little reversal hammer. And we'll see if it pulls back down to the 50-day moving average and bounces higher, or we may look at trying to take it higher from where it's at. Again, with a target prior to earnings somewhere around the 40, somewhere between 45 and 46. And so, yeah, Michael, I will do that. And so, and yeah, Michael, if you're supposed to be on that mailing list, didn't get something, just watch your email, because I just want to make sure that you are in fact signed up, because you'll have to sign up for specifically for that that list, and so that'll come out from A. Weber. So Momo's looking interesting. Baba is another one. Again, buyers are coming in on Baba just at past support right there at the 147 level. Will it now? Baba has earnings coming up on next Thursday, I want to say the 17th, before market opens, and so both of those may give an opportunity to trade to the upside, but we're going to be keeping those very, very quick type trades. Other stocks that I'm looking at, just so you'll be aware, Netflix, Netflix, NFLX, Disney came out and kind of dumped on Netflix's parade, but what happened is sold off right to a support level and past breakout at this 166 level. We'll see if it's going to take back off. Watch the TSI, watch the momentum, watch the market forecast. On a weekly chart, it looks like it wants to fall. Why am I not seeing that? Hold on a second. Let me get, there we go. There's the daily. Again, it has basically pulled back all the way to the breakout area, and oftentimes that's a good signal that we're going to bounce from there. However, on a weekly chart, this looks really weak, and so I'm not going to argue with the momentum falling out of the trade. If the momentum is going to fall out of it, we're going to probably either go sideways or dig lower. So I'm not going to try to over anticipate what's going on there. And last but not least, NVDA had a earnings yesterday, and basically dropped really hard and fast. Really interesting. We did really well with our strategy to trade on this today. We went outside the expected move slightly on both sides, and picked up the premium on both of those. We could have actually probably let them both expire worthless, but I don't like doing that, so we bought them back for one for a penny, one for a nickel. So really pleased about that. One analyst came out and gave a profit, or not a profit, but a price target on NVDA of $90. So keep an eye on that, because this is, weekly wise, this looks really weak. I mean, 1, 2, 3, almost 4 weeks covered up by that one bullish, bearish engulfing candle. So we could see a drop from, a continued drop from there. I can see it going 140 or even down to 120 very quickly. And last but not least, our buddy Tesla. I'm thinking about running a contest. Let's have a contest of trading Tesla so we can buy a new Lexus. Does it sound like a lot of fun? My wife would really enjoy that. So Tesla's holding up really well under crappy market conditions. But we want to be patient and wait for the triggers for when they come. And right now, weekly chart, we're showing a spinning top at support/resistance. If we drop the 352.82 level, then we're probably going to go back and retest the support here at 346, or even down into the gapping window, which would put us back down around the 50-day moving average. So, okay, I've tried to talk as quickly as I could today, folks. Went about 26 minutes. I apologize for going over my allotted time. Mark, okay, and you are signed up for the early warning alerts? You are, okay. Yeah, Scott, I was just reading it through on, I was reading through just the news feeds that comes up. I didn't note who it came out from, but and I don't think it was Morningstar, but it's just basically coming out and saying, hey, this is our target on. Maybe they raised it from 85 to 90, but I'm sitting there going, geez, it's sitting, way above that right now. I'd have to look at the news feed. Hold on a second, I can do that, and then we'll definitely bug off after that. Let's see here. Okay, news feed. Maybe news feed. Let's see. NVDA, earnings, dividend. News. Yeah, I don't see why I don't know why I'm not picking up the news on that. There we go. Here was one of them. There we go. My bandwidth is a little bit slow this morning. There you go. BMO Capital boost NVDA price target to 80, 90 from 85. One of the other NVIDIA price target raised to 110 from 90 by this guy's. And and I always find that really interesting, is how in the heck can they raise, when it's already operating above their price target as an analyst. I mean, I get it, kinda, but dadgummit, you're already above your price target. So, anyways, maybe somebody can explain that to me. I'm sitting there going, yeah, if you're being bold, you're not being so bold. And I could go into So, okay, guys, we're going to call it a day so I can get ready for the next webinar. Thank you so much for joining us. Have a great, wonderful weekend, and we'll double check. And I've got to check for Michael. I've got to check for Mark on the early warning alerts. Okay, God bless everybody. Aloha.